Welcome to ADA Technical Review, your trusted source for daily ADA market analysis, charts, and technical insights. This video is for educational and informational purposes only. I am not a financial advisor, and nothing in this video should be considered financial or investment advice. Cryptocurrency markets are highly volatile, and you should always do your own research before making any investment decisions. Any price analysis, predictions, or market insights shared in this video are based on personal opinions and publicly available data. I am not responsible for any financial losses you may incur based on the information provided. Invest responsibly and never invest more than you can afford to lose. ADA continues to trade within a clearly defined technical structure, and in this weekly update, the focus remains on probability, confirmation, and broader market context rather than short-term speculation. Looking at the higher time frame first, the weekly chart shows that ADA is still respecting a major support zone that has been holding for an extended period. This support range lies roughly between 0.266 cents and 437, with price recently reacting around the point of control near 38.5 cents. These levels are significant because they represent areas of historical volume and market balance, and their continued relevance suggests that the market is still in a decision-making phase rather than a confirmed trend shift. Despite this support holding, the overall local trend remains corrective to bearish. There has not yet been enough evidence to confirm a sustainable reversal. Holding support alone does not automatically imply bullish continuation. Instead, it often signals consolidation while the market evaluates its next move. At this stage, the most reasonable working thesis is that ADA may be forming a larger internal wave 4 within the broader structure. A meaningful upside move from current levels would support this interpretation, but until that move is confirmed, it remains a hypothesis rather than a conclusion. From a broader structural perspective, the recent decline in ADA is deep and complex enough to potentially represent a completed B-wave correction. This interpretation fits well within Elliott Wave theory, especially given the duration and retracement depth of the move lower. However, technical validity alone is not sufficient. For the market to confirm that a new bullish phase, specifically a C wave to the upside, has begun, a clear 5-wave impulsive move higher is required. Without that impulsive structure, any upside remains corrective in nature. It is also important to acknowledge that ADA could still move lower before a sustainable upside begins. A revisit toward the 32.2 cents area remains a realistic possibility. While another low is not strictly required, current momentum and internal structure suggest that downside pressure has not fully resolved. This aligns with what has been discussed over the past several weeks. The market has yet to deliver convincing confirmation that the corrective phase is complete. When shifting focus to the lower time frames, particularly the 1-hour chart, the picture becomes slightly more constructive. Early signs of momentum are beginning to appear, and price is reacting from an area where a technical bounce would make sense. However, this movement is still too small and too early to signal a trend reversal. ADA has not yet broken above its key confirmation and signal levels, which are necessary to shift the broader bias from corrective to bullish. The short-term structure currently appears consistent with an A2BC corrective move to the upside. If this pattern plays out fully, the C wave could carry price toward the $46.5 region, which aligns with the 100% Fibonacci extension of the initial A wave that formed between December 1st and December 4th. So far, the market has produced an impulsive A wave higher, followed by a corrective B wave pullback, and is now attempting to develop the C wave. This structure suggests a corrective rally rather than the start of a new long-term uptrend. Interestingly, similar corrective patterns are appearing across multiple markets, including Bitcoin and several altcoins such as Link and Sui. While each asset has its own technical nuances, this broader alignment provides additional context. That said, correlation alone does not replace confirmation. Structure and follow-through remain the most important factors. More aggressively bullish scenario was intentionally removed from the analysis earlier. Not because it is invalid, but because it currently lacks sufficient supporting evidence. Although ADA did produce a clean 5-wave move higher earlier in December, followed by a 3-wave pullback, the depth of that pullback reduces the probability of immediate bullish continuation. In technical analysis, it is essential to separate what is possible from what is most likely, and at this point, probabilities still favor a cautious, corrective interpretation. Looking ahead, the next major objective for the bulls is a decisive break above the 47 level. Beyond that, the market must deliver a clear 5-wave impulsive advance to confirm that a larger C wave to the upside is underway. Until those conditions are met, the primary assumption remains that ADA is consolidating within a broader Wave 4 structure. In summary, higher time frame support continues to hold, but the broader trend remains corrective. Short-term momentum is improving, yet still unconfirmed, and while a corrective upside move is possible, confirmation is required before adopting a bullish bias. Patience and objectivity remain critical in this phase of the market. That concludes this ADA update. Let me know in the comments where you think ADA is heading next. If you found this video helpful, make sure to give it a like. And don't forget to hit the subscribe and bell icon for daily ADA updates and in-depth crypto analysis.